Welcome to the end of day review for Friday, the 8th of December 2023. Starting off with the economic calendar, as you can see, there were no high impact news events for the London session, and we simply had a bunch of high impact news for the New York session, being it an NFP Friday. So unemployment news was quite important, but yeah, as you can see in terms of the news releases, they were largely positive for the USD, and thus we should have anticipated, or we could have anticipated, or faded the news in in a short direction, given that the USD would be stronger than the pound, and thus GBPUSD should move downwards. Jumping into the charts, what we can see is just a quick overview. Market structure is confirmed bullish. As you can see, we've been making higher highs and higher lows for some time now, and as I said in the beginning of the week, we began validating this pullback phase, and we have all these pullback phase OBs. The pullback phase leg right here is a primary leg, and then in addition to that, we have these pro trend OBs to the left, which can help support targeting the external range liquidity. In terms of where we started for the morning, we were roughly in this area, and given that we were reacting to the pro trend and the pullback phase, we could essentially trade both directions. Excuse me. We could essentially trade both directions by simply understanding and interpreting the order flow on the 30-minute, 15 or 5-minute. I generally like starting on the 15-minute, so that's the time frame I started off with this morning. And coming into the morning, you can see that was the Asia range right there. And yesterday we reacted to this pro trend OB, and as a result of that, we created this pro trend primary leg right here. This primary leg was validated because we had a change of character, and then towards the end of the day, the New York session kicked in, and we had the momentum for the day, and that validated demand in control, which then created this nice demand chain. We also have this supply and demand flip right here, which creates this OB. Lately, what I've been noticing and paying attention to is liquidity in the leg concepts, and what you can essentially see is starting in the morning, we have a lot of reason to believe where a new London low of the day would form, which would be in this area. And if the low of the day was actually to hold, then we'd consider playing the longs after the Asia range is actually broken. But as you can see, the high of the Asia range remained intact, and we actually came lower and triggered the entry. So to explain the rationale behind the entry, what you can see is within this specific leg that I'm going to highlight now, this leg in particular, yes, we have the flip OB right here, but in this leg there isn't any liquidity in the leg, which would mean that this level is likely to be the liquidity in the leg. And given this fact, we know that price has, well, potentially will actually take this out. In terms of positioning the entry, generally for London based trades, I like to enter at minimum at the 38% fib level, which would mean I'd place my entry right there. And then, given that I know where the liquidity in the leg is, and the fact that the liquidity in the leg isn't attached to the chain, I'm not concerned that price will actually seek all the liquidity. So for that reason, I felt it appropriate to actually just use the 11% level as an appropriate stop loss, because there's adequate space to allow price to actually sweep the liquidity in the leg and then continue to the upside. As you can see, this would have been a loss. However, given that it being an NFP day, I would close my trades prior to NFP, knowing that just before there's unlikely to be significant momentum. So it depends. I'd probably, at the London lull, there's still about 2 hours to go before the New York session. So when the London lull starts, I would have broken even, and then by 2 p.m., chances are I wouldn't have closed the trade at 1 hour or half an hour or whatever it is. I would have been rather taken out break even with commissions, which is fine. So this is roughly a break even trade, if we looking at it fairly. And then what we can see is the NFP news came out, and like I said, most of the red folder news for the USD was positive, and thus we could expect GBPUSD to move to the downward direction, and that's precisely what happened. And we then subsequently came into the pro-trend extreme of the swing leg. Given this fact, what it essentially means is that the pullback phase has achieved its objective, right? So the pullback phase started right here, and its primary objective would be to reach the pro-trend extreme, and then from then on it becomes invalid, and we essentially then have all the reason to believe that this will be targeted. But we do have one last barrier to consider, being the last point of supply, which would be this, probably this OB. This is, we could use the range, but the last point of supply being this, and given that we have reached the pro-trend extreme in terms of navigating it, you actually want price to tap the OB and then have an order flow shift to validate that this is indeed IRL, to then target this low. You generally don't want to go and target this because there's more reason for longs to play out than shorts. So whatever shorts you do take should be short term in nature, and it's simply an idea just to hedge your risk in terms of uncertainty. Like right now, even though we're highly biased to the long side, we can't ignore the fact that on the 4-hour order flow is still supply and control. So yeah, that pretty much brings me to the end of the day. In terms of getting into a short after NFP, there was an opportunity on the 5 minutes. So on the 5 minutes you could see supply held here, then we had a break of structure, price came back in, and maybe we could have shorted here. The other alternative is when price bounced from here, we could have shorted from this area using this as liquidity in the leg. Although to be honest, given the momentum, I would have probably just entered at the range something like this, anticipating this to be the liquidity in the leg, and probably just using a 38% level, sorry, an 11% level, rather than covering the high of the day, to then target this low, which is roughly a 2 to 4. But in my opinion, that was low probability, especially because we've essentially achieved the target for the pullback phase. Had we not done that, I think I'd be happy to actually execute on that trade. The other thing was the daily range. At this point, when we came and bounced up, that's like 90% of the daily range. So the chances of continued shorts are diminished in that instance, and thus that's pretty much the end of the day. And then obviously the New York session created a new low of the day, which then would suggest that the daily direction bias for the day was indeed shorts, and trying to long is just low probability in my opinion, not generally worth the risk. So yeah, that's the end of day review. This is my fresh markups for the charts. If you look at my live trading, you can see I positioned myself slightly different, but my stop loss was in the same place, and the outcome of the trade was indeed a break even. So yeah, nothing much to add. Have a good weekend, and we'll chat again on Monday morning.